Hello and welcome everybody to the Gold and Silver Club end of week commodities review for the 9th of January 2015. We'd just like to wish you all a happy new year. Hope you had a fantastic Christmas. We definitely look forward to going over some analysis with you today. We do have non-farm payroll, which will be just this afternoon. So we are expecting quite a lot of volatility today in the markets. We'll be doing some pre-analysis of the charts prior to the announcement, and we'll see where we are at after the first week of January. So, of course, as always, we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an overview of the commodities markets. We'll look at the top trades of the week. We'll cover live market commentary, technical analysis, and, of course, we'll be answering any questions you may have as well. So I'm Phil Carr, professional trader, trainer and speaker. I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we have appeared frequently on financial television. So that's just a bit of background on the Gold and Silver Club. We'll have a look at the price of gold right now. We're currently trading at $1,211 per ounce at the moment. So we'll have a look at the technicals just very shortly. Before we do so, we'll have a look at the top trades of the week. The top trades of the week using the Gold and Silver Club signature trading strategies are as follows. So first of all, on Friday, the 2nd of January, we had a lovely capitulation on gold. We came down and we sold off to $1,167 per ounce before we had a capitulation, and we had a lovely breakout to the upside, which we managed to stay and hold throughout this week as well. We had a breakout of over 350 points. So 110 points was the risk on the trade, $1,100 for a profit of $3,500. So 350 points profit for a 3-to-1 on gold. We then had a lovely sell short opportunity in the early part of this week on WTI crude oil. So we sold into this market, continuation of the downward trend. The risk on the trade was $1,300 for a profit of $3,900. 3-to-1 on this trade as we continue to see WTI and Brent crude oil sell off. And we also had a lovely sell short opportunity on Brent crude oil. We had a 400-point move, so $4,000 profit for $1,900 risk for a 2-to-1 on Brent crude oil this week, as well as we continue to see a sell-off across the energies complex. Okay, so what we'll do now, we'll move over and have a look at the technicals, and we'll see how the markets are lining up prior to non-farm payroll this afternoon. So the first market we'll actually have a look at here will be the gold market. We can see gold after the FOMC the minutes which came through on Wednesday. We've seen some hesitation here on gold. Some of the profits which we've realized over the first few days here of January, we can see have come to a standstill here as the price is consolidating around $1,211 per ounce. So we do want to note on gold, the consolidation at the moment that we really need to get a break from will be, we've got a nice little channel here of consolidation with the prices just staying between, which is the 1222 level down to $1,200 per ounce. This is the whole consolidation zone where we see gold just remaining prior to the non-farm payroll and then really looking for a breakout from this zone as well. There are also a number of trend channels to take into account. We do have a resistance channel here just at the moment on gold, but we've also got a supportive channel, the lower end here as well, which has been providing some support going back to the beginning of November. So today will be important for the US dollar index. It will be important for gold to see which way we will break out, whether we'll get a continuation to the upside here. We are trading at the moment on the metals. We're trading currently at 3-week highs here, and gold is looking firm ahead of the US jobs data, poised for a weekly gain again this week. So currently gold is looking good ahead of non-farm payroll today, so we'll continue to monitor that, and there should be some really solid trade opportunities just off that announcement. We'll have a look at the US dollar index now as well. So the US dollar index has come up and retested a very key zone. We've actually come up and tested the highs of 2005 this week, so we are currently sitting very close to 9-year highs. If we do get a breakout of that level, it will be a very key area for the US dollar to break out from. It will then have breached 10-year highs here. So at the moment, we can see the US dollar index is pulling back a little bit from these highs. We've got a bit of a retracement from the 92.60 level, and the US dollar index again will definitely be very much volatile and in play on the non-farm payroll announcement this afternoon, depending on the strength of the data which comes out from America regarding the non-farm payrolls. Okay, so the US dollar index is definitely one you want to keep an eye on this afternoon. Gold as well. If we move over to silver, very similar situation to silver. It's had a nice move. We actually capitulated on silver on the 1st of December last year. We had a huge capitulation when we sold off. We came down and broke through 4-year lows, just shy of $14 an ounce. Since then, we're building a little bit of a base on silver at the moment. We do see short term there could be more upside here on silver. The overall picture on silver is bearish if you go out to the much larger time frames, but in the short term, we see there is some strength here on silver, and we could, if we get some negative numbers coming out of the US this afternoon, see a breakout as well on silver to the upside. On the flip side of that, if we do get stronger than expected US numbers, we would expect a pullback, and I'll be looking for a pullback back to the trend channel here, which would take us down to circa around the $16 per ounce zone here on silver. I think silver will definitely be one to watch as well. If we move over to platinum, platinum also faring quite well. We do have a downward trending channel, which platinum is coming quite close to retesting at the moment. We've got a pennant formation starting to develop here, in fact, on platinum right now. So we can see this nice upward trending channel, a downward trending channel, and we're looking for a resolution of this soon. We really need to get a nice breakout either to the upside or to the downside for the next strong move here on platinum. Platinum holding up very well in the much larger time frames. We can see around the 1180 zone is a very key level of support for platinum as we continue to consolidate, and we are quite oversold for the platinum market at the moment, so we are looking for a breakout potential here. So platinum is one for you to watch as well. Copper today, we did break down on copper. Copper is sitting around 4.5-year lows at the moment. It's heading for its 4th weekly loss right now. So copper right now is seeing 4 weeks of losses, mainly due to continuing worries about demand from the top consumer, China, and a fragile growth in Europe currently. So we are seeing that play through into copper. Do note, though, although we broke down earlier on this morning, we have retraced back within this very key downward trending channel. That's been very important for copper going all the way back to July this year. We are being contained within this channel. We're seeing a lot of buying towards the lower end of the channel. If we go out to the larger time frames, you can see how well the price is being contained within this channel. So again, we'll be looking towards the data this afternoon from the non-farm payrolls to see whether we'll get supported around the lower end of the channel here. If we do find strong support, we could get a rotation back up to resistance. So copper could present quite a good buy opportunity only in the short term. The bigger picture here is that we want to stay with a sell short on copper, but in the short term we may get a decent retracement just back up to the upper end of the trend channel here. Okay, so do look out for copper. Copper could be quite a nice risk to reward potential if we do get a breakout to the upside here, because it is quite oversold right now, similar to platinum. We'll move over now and just have a look. Before we go over to the energies, we'll have a look also at the grains here, because we've seen some nice moves just in the last couple of days on grains. If we go over to wheat in particular, wheat has hit 6-week lows here and corn down for its 4th day on slowing demand. Chicago wheat fell for a 3rd consecutive session just today to its lowest in 6 weeks as slowing demand for US supplies continues to drag on prices. We can see here, in fact, if we go out to the larger time frames where we're starting to break down, we've got a major trend channel here on both the wheat and corn markets, which is being tested, and we're seeing a nice clear sell-off here on the wheat market. So we're looking to stay within the overall trend here, which isn't a downward trend. If you go out to the much bigger time frames, we can see here where wheat is starting to break down quite nicely. So wheat, we are positioning ourselves for a sell at the moment as we continue to sell off here. You can see the breakdown which we're getting at the moment, just sitting around the key support, but we're looking for more weakness in both wheat and also in corn at the moment. Very similar situation with corn too. You can see this new trend channel which is developing, and on the much larger time frames we are overall in a bearish market here still with wheat and corn. So we're looking for more downside over the next week or so on both the grains. If we move over and now have a look at the energies, we'll just go over actually and have a look at Brent crude oil. So the oil market just continues to find weakness at the moment. We can see here on Brent we had a lovely sell short opportunity just again this week, and you can see quite clearly at the moment that we are consolidating right near key support zones again for oil here. If we just go over to the current price, we're currently sitting on Brent at $50.67 here. So we're just seeing a continuation, oil heading for its 7th weekly loss as the supply glut drags here. Oil prices looking very weak here as key producers are showing no sign of cutting output in the face of global supply glut. So we can see this quite clearly at the moment. If we get another break here of the weekly lows, we will be looking for more downside. Again, we don't see a bottom being put in to the energy markets just yet. You can see we're just getting continuation. We've been in a very strong downward trend for some months now, and we're just continuing to take advantage of breakdowns in price here. Just our overall position here is very much a sell at the moment on both Brent and WTI, and we see more downside in the short term certainly. So oil looking good for more downward pressure here too. So that's what we're looking at on the energy front right now. So just to quickly recap for you before we go back to the main presentation, we do have the non-farm payrolls this afternoon. In fact, let me just take a minute here if there are any additional questions, and we'll just see if we've got any other updates we can give you. So if you've got any additional questions, guys, do post those now. I'm going to take about 30 seconds to a minute just to read through any additional questions, and then we'll move back to the main presentation. Okay, so just in terms of a couple of questions regarding the fundamentals here on gold right now and what to look out for. So again, traders are watching closely the US jobs reports just today, which is really going to give us the clues as to how gold is going to perform as we go into next week here as well. We can see right now we're still getting quite a lot of safe haven bids at the moment amid the political uncertainty in Greece, plus robust Chinese demand. We do have the Chinese Lunar New Year, which is going to be in February. Safe haven demand does appear to be rising again as oil prices slump. Concerns about the Greece exiting the euro have also given additional support to gold at the moment. The metal was gained 2% so far this week, with snapping a 3-week losing streak after global equities this week slumped on worries over political development in Greece that could see it leaving the eurozone. So we may be, one point to note is we may be limited in the downside today due to the fundamentals. So even if we do get very strong data from the US and we see a breakout of the US dollar, in the context of where gold is at right now, the US dollar index has broken out this week to 9-year highs. On that breakout, we would normally expect gold to be much weaker. So you would expect gold to have potentially broken below its 4-year lows, but it hasn't. It's held quite strongly. In fact, we're about 700 to 800 points above the 4-year lows here for gold, which would be around $1,130 an ounce. So overall, we are going to be more on the bullish side for gold right now. Even if we get any sell-offs on the non-farm payroll, we could very quickly get supported. So I would just look out for that on gold. Gold will be the main market that we'll be looking at. Keep an eye on this afternoon for the non-farm payrolls. Okay, great. And with that, actually, if you would like to find out more and find out how to actually trade the non-farm payroll with the Gold and Silver Club. We are going to be doing a session on non-farm payroll very shortly. You can actually find out how to join our traders at the Gold and Silver Club to trade news announcements with us live. You can find out about our upcoming courses, which we've got in 2015. Very simply, if you go to www.jointhegoldensilverclub.com, or you can contact us at our London, New York, Sydney, Johannesburg, or Budapest offices. I'll leave those numbers on the screen for you very shortly. Also, make sure you subscribe to our newsletter. You'll receive free weekly reports on the precious metals, energies, agriculture. You'll get live market analysis and prices as well. So just go across to www.thegoldensilverclub.com in order to get that information. Okay, and I shall leave the details on the screen for you all there too. Okay, fantastic. So I wish you all good trading for this afternoon. Again, Happy New Year to you all. Great to see you all back here. And good trading for today, guys. And we'll definitely see you on the next one. Okay. Yeah, cheers, Richard. Thanks, everyone. Take care, Adinda. Thanks, guys. Bye-bye.